Look, I know Big Pharma is not exactly beloved by Wall Street right now, but tonight, right here, I'm going to say that at this point in the earnings season, that these stocks have become absurdly cheap versus the competition. So cheap that you got to buy one. Let's tick them off. First, how about Merck? This amazing company has a groundbreaking cancer immunotherapy drug called Keytruda. It did $3 billion in sales this quarter. This is easily on track to be one of the biggest blockbusters in history, maybe the biggest. Yet Merck stock, 16 times earnings. That's nuts. Pfizer just reported an upside surprise. Well, that doesn't happen often. I expected Pfizer actually to give you a shortfall now that its wonder drug, Lyrica, is off patent. But instead, they delivered. Yet somehow this stock trades at 14 times next year's earnings. And with a 3.8% yield? Are you kidding me? Biogen may have come up with a way to treat Alzheimer's. They can't stop it, but they might be able to slow it down. The analysts were all skeptical initially. Now, one by one, they're being converted. I think they'll ultimately all be believers. Why? Because Biogen resumed this work at the behest of the FDA. There's still more holds than buys on it, which sells for 9 times next year's earnings. I'm sorry, that's insane. This is a $54 billion company that could be worth double. Last night, Amgen reported a better than feared quarter. That didn't require management to cut their forecast. Amen. I'm calling that a win with these guys. Amgen's starting to win back major market share in the migraine business. Their key franchise, Aimovig, had been the market leader until Eli Lilly started making major inroads with the drug distributors and the drug stores. Amgen hasn't done such a good job. Last year, I was on the phone with McKesson for hours to order my Aimovig, and even though when I got it, they wouldn't even send it to where I wanted it to go. They were horrendous. Now, though, Amgen's getting the thing into the drugstores. On top of that, I think they're just scratching the surface with this psoriatic arthritis drug that they bought from Celgene, because Celgene had to sell it, according to the government, to merge with Bristol Myers. Hey, speaking of Bristol Myers, it had a superb quarter, too. I expect the Celgene deal will make them a fortune once it closes in December. I know the stock has spiked here, but it still has nearly 3% yield. It sells for just 12 times next year's earnings. I've been saying for 10 points now, buy Bristol Myers, I reiterate. While AbbVie hasn't reported yet, I'm confident the numbers will be good. More importantly, AbbVie's acquisition of the undermanaged Allergan should be amazing. No, I'm not worried about Botox's challengers. I'm excited about its new migraine pill to deal with pounding pain. As a spokesperson for the American Migraine Foundation, I can tell you that the concept of acute care for migraine is a very big deal. There's nothing out there aside from standard painkillers, which I regard, frankly, as a joke played on sufferers like me. This drug could be huge. Novartis is under pressure because one of their subsidiaries got caught tampering with clinical trial data, although the drug almost certainly would have been approved anyway. I think the problem will soon be solved. 15 times next year's earnings. Buy GlaxoSmithKline. CEO Emma Walmsley has moved heaven and earth to turn Glaxo into a more R&D-focused pharmaceutical company. It's working. She's clobbering the competition. Eli Lilly got hit over some glitch in diabetes drugs, but it's coming right back. AstraZeneca. Some are worried that their strength in their cancer franchise was chimerical. I think it's the real deal, although the stock has run too much at this point. I don't want you to chase it. Which brings us to the real anomaly, the one that is driving me crazy. Yes, of course, it's the elephant in the room. It's Johnson & Johnson. Now, the bears will tell you that J&J is no longer a drug company. It's really more like a law firm that happens to have a sideline in pharmaceuticals, medical devices. These days, the stock trades based on litigation. Last night, J&J revealed that they can't find any asbestos in the talc they recently recalled. They hired a third party to conduct massive numbers of tests, like the FDA did. Well, that allowed the stock to rally 2.9%, still tip of the iceberg. J&J's got opioid lawsuits. They got the original talc lawsuits. Could end up being very expensive. I think the stock will remain tough to own until we get some resolution here. That said, this too shall pass. I'm betting my charitable trust money that J&J comes out on the other side of this in good shape. But you can't own this unless you can take a lot of pain. At the end of the day, though, nearly all of these drug stocks are just too cheap. They're trading as though Elizabeth Warren's going to win in a landslide next year with a large enough majority in Congress to establish price controls. They are priced for total imperfection. But what if she loses the general election, or someone more moderate wins the primary, or Warren takes the White House but lacks the votes in the Senate to pass single payer? Then the drug stocks can roar. At this point, even if she takes a big lead in the polls, these stocks, they've become too cheap to ignore. I say buy one. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.